Okay, so let's talk about yens then. And you can see the Swiss yen I've gone for first. I'll tell you exactly why. I really like the look of that, and I'll explain in a minute. But the Swiss franc against the Japanese yen, well, because the Swiss franc has shown so much strength across the board for all currencies, if you look at anything with a Swiss franc in it, you know, it has gained strength rapidly. It's because of their interest rates and how they kept them up. But now you've got to the point where, you know, the Swiss bank's still doing well, but you've got rhetoric from the Bank of Japan describing how they want to end a negative rate stimulus next week. Okay, that came out last night. Of course, when you end negative rate stimulus, you put the rates up. And when you put the rates up, the cash swaps to that currency. Now, what you can see at the moment is really, really cool, because before you had those comments from the Bank of Japan, you had sideways movement. Again, much like I was saying earlier, because you don't have much change from the US, for example, you're going sideways for a significant period of time. And because you didn't have much change from the Bank of Japan or the Swiss bank, you went sideways in the same way. Now, people like myself and my academy students would have, and I did myself, hedged all of this. Okay, you could have hedged it long, you could have made loads of money doing that, and you could have killed off any bad trades you've got. Okay, or you could have just bulked up your balance / equity, if you like. But at this point, you're getting the negative sentiment starting to feed in. So the Bank of Japan putting up rates pulls the cash from the Swiss bank to the yens. I mean, you can think about it in simple terms like that. Probably not literally, but that is the case. And of course, in the mix is if the Swiss bank eases rates, okay, which they may or seem likely to do, then it's just going to cause the sentiment to rush it down even further and faster. So I've got it short on pulls up. I'm short now. Anything higher I would like short, and my bias, therefore, with the sentiment in mind and the technical basis of your chart, I'm looking for a continued downtrend. Now, it's not just sentiment that we're looking at here. It's not just the reason for it. It's the technical aspect. You remember just a minute ago, I said on the pound, well, that looks like there's still momentum to the upside because it's hardly fallen. Well, this has hardly risen, hasn't it? So you're seeing the same thing, but turned over. So again, if you're a trader, you're a detective, you're on a murder scene, you're playing Cluedo, you're trying to work out, what does that mean to me? If there was strength for the Swiss franc and weakness for the yen, don't you think it would have pushed up a little bit harder? Okay, I do. But that's not the case. There's not this confirmation from the Bank of Japan yet, so it's tentatively falling. But even from a technical basis, if you're looking to trade a new form downtrend, the odds are that you should be shorting on pops to continue the fall and exit gradually as the market comes down like this, and you hit various key MAs along the way, you exit, you rebuy lightly, and you reshort, and so forth and so on. But yens, particularly the Swiss franc, very interesting because they're shaping up with their technical bias as mentioned. Okay, and of course you've got the sentiment there as well. So you're mixing in the two key factors which are essential if you want to be consistent trading for income. And that is seeing things from a technical and a fundamental basis. When you put the two together, you have the perfect plan for identifying areas for re-entry or new entry and carrying those long term within the money stocks, because if the sentiment drives your way, you can keep moving your stock down and lock in further gains, which is something a lot of our members do. If you look at the dollar yen, the situation is similar. You've got lots of rhetoric from the Fed about their rate easing. You've got Japan saying they want to put the rates up. That is just literally, the two together are great for long-term falls. You can see what's happening here as well. There's long-term lower highs, very, very stagnant or tentative falls over the very long term, but you can see what's happening. Slowly and slowly it's falling. This kind of economics is not hard, by the way, but you need to know what to apply, because a lot of people, they'll look at the PPI later or the retail sales and say, wow, what does the retail sales mean? It doesn't matter what the retail sales mean. What matters is what the central bank will do in line with that data. You don't need to know exactly what the data is. You need to know what the central bank is going to decide, because at the end of the day, it's not literally the data that does it. It's the voices and it's the decisions of the higher bodies that are going to be the cause for that new stimulus and that newfound downtrend on your yens, if it occurs. If it doesn't occur like that, then you'll see a change from the Fed, But again, it will just be something they say because of the data. So don't worry if you're not an economic genius, neither am I, but I know exactly how currency markets are reflected by the decisions of a central bank and the rhetoric that they put out similarly. So that is your